Okay, so from the sources you shared, it seems like you're really trying to unlock the secrets of swing trading.
Yes.
Specifically, zeroing in on those high probability strategies, the
Refs.
ones that really swing the odds in your favor. But also, you want to know, like, what are the potential
Of
pitfalls?
course. Got to manage that risk.
Exactly. You've come to the right place because that's what we're diving into today.
Absolutely. Swing trading is definitely not for the faint of heart.
No, it's not.
It's all about, riding those market waves, trying to grab gains in a matter of days or weeks.
Yeah.
But it really demands a cool head and a solid understanding of just how the market operates.
Absolutely. And speaking of understanding, one of the articles you shared from Forbes Advisor, it defines swing trading as that sweet spot between day trading and long-term investing.
Right.
Yeah. Day trading, we could say it's like a sprint, right?
Yeah.
Long-term investing, that's more like a marathon, but swing trading, it's like a strategic relay race.
I like that analogy.
You got to be nimble, you got to be quick on your feet to spot those short-term price swings.
Yeah. You need to react quickly to new information.
Exactly.
But you're not just, making these decisions on a whim.
Right.
You're looking for calculated opportunities using both technical and fundamental analysis.
So it's like a blend of reading the charts like a pro, but also understanding the underlying strength of the companies that you're trading.
Exactly.
When I was reading through the different strategies, it was like opening up this whole toolkit.
Yeah, there's a lot.
We're talking Fibonacci retracement support and resistance, Bollinger Bands, even something called fading. And with so many options on the table, I'm really curious to know what actually delivers those high probability trades that you're looking for.
Well, the truth is, there's no magic formula,
Yeah.
right? It all comes down to finding the strategies that really mesh well with your personal trading style and how much risk you're comfortable with.
Yeah.
It's kind of like some traders, they're comfortable with like bungee jumping off a cliff,
Right.
while others prefer a scenic hike up the mountain.
I'm definitely more of a scenic hike kind of person.
Right, exactly. And both can lead to some incredible views.
Of course.
But the path you choose really depends on your personal risk tolerance.
It's like finding the right pair of shoes.
Exactly.
What fits one trader might pinch another.
100%. And that's where understanding your risk-reward ratio is
Yeah.
absolutely crucial.
Mm-hmm.
Before you jump into any strategy, you have to ask yourself, how much am I comfortable potentially losing to reach my profit goals?
Mm-hmm.
So you're always weighing that potential reward against the potential risk. Just like that Forbes article said, past performance is not indicative of future results.
Oh, that's a good one.
Sure.
Just because a strategy worked before doesn't mean it's a guaranteed win the next time around.
Exactly. The market is constantly changing, so you always have to be adapting.
Yeah.
You never want to blindly follow something just because it worked out in the past.
It's about being flexible and being able to pivot when needed.
Exactly. You got it.
So speaking of strategies, let's unpack a couple that I think will be right up your alley.
Okay, sounds good.
The Fibonacci retracement strategy, for instance.
Right.
Have you ever used this one?
Absolutely. It's fascinating how it uses this mathematical sequence called the Fibonacci sequence to identify those key support and resistance levels.
So instead of just relying on your gut feeling, Fibonacci gives you a sort of framework.
Yeah, exactly. It's like having a roadmap with potential turning points marked on it.
That's a great way to put it.
It's not about predicting the future, but it's more about recognizing where the market might make a U-turn.
Okay.
And this helps you pinpoint those entry and exit points more effectively.
That's brilliant. Now, while Fibonacci helps you ride those retracements, the breakout strategy is about catching that momentum before it takes off, isn't it?
You got to picture a rocket ship ready for launch.
Okay.
The breakout strategy is all about spotting the signs of ignition and hopping on board before it blasts off into the stratosphere. Essentially, you're anticipating these surges in price movement, whether it's up or down, and riding that wave.
So timing is everything with this strategy.
Absolutely. Imagine being too early to the party.
Yeah.
You're watching the rocket fizzle out on the launch pad, or being too late and completely missing the liftoff.
Oh, yeah.
You really have to keep a close eye on those trend lines and those support and resistance levels
Gotta be careful.
to make sure you're entering and exiting that trade at the perfect moment.
So it's like catching the perfect wave in surfing.
Exactly.
You don't want to be too far ahead or too far behind the curve.
Right.
But even with perfect timing and a solid strategy, there are always risks, right?
Always.
I was particularly struck by the article's mention of overnight and weekend volatility.
Mm-hmm.
It seems like swing trading requires a different kind of vigilance.
Yes, it does.
It's like the market never sleeps. It's always whispering these little secrets in its sleep.
Right.
And if you're not careful, those whispers can turn into a roar come Monday morning.
Exactly. That's the thing with swing trading. You're exposed to those after-hours market swings,
Right.
which can be a bit unpredictable.
Right.
You might go to bed feeling really good about your position,
Yeah.
only to wake up to a totally different playing field.
That's why risk management is crucial for swing traders, maybe even more so than day traders who are in and out within the same trading session.
Right.
So how do swing traders safeguard themselves against these unexpected market tremors?
Well, one common approach is to use something called stop-loss orders.
Okay.
Think of it like this. It's like setting a safety net for your investment.
Okay.
It will automatically sell your shares if the price dips below a certain threshold that you set.
Ah, so it's like having a guardian angel looking out for your portfolio while you're offline.
Exactly. It's all about protecting your capital, especially when you're dealing with the uncertainties of the market.
That makes sense. But of course, stop-loss orders, they're just one tool in the risk management arsenal.
Of course.
Diversifying your portfolio is another key strategy.
It's like that old saying, don't put all your eggs in one basket.
Exactly. Spread that risk, and you're less likely to be taken out by a single market hiccup.
Exactly.
But even with those safeguards in place, relying so heavily on technical analysis must come with its own set of challenges.
You're absolutely right. One of the biggest pitfalls is misinterpreting those technical signals,
Oh, yeah.
especially for newer traders.
Yeah, you can see how that could happen.
What looks like a breakout on the charts could actually just be a head fake. A little bit of market noise that leads to a poorly timed trade.
It's like thinking you've discovered this hidden treasure map,
Right.
only to realize you've been deciphering a grocery list this whole time.
That's a great analogy.
And that's why it's so important to have a solid understanding of technical analysis before diving headfirst into swing trading.
Oh, yeah.
Yeah.
You have to be able to filter out the noise.
It's not enough to just recognize the patterns. You have to understand the nuances, the
Sure.
context, the underlying market dynamics to make those informed decisions.
Exactly.
And to avoid those grocery list misinterpretations.
Right.
The article also pointed out the risk of missing out on long-term trends,
Yes.
which seems a little counterintuitive because you're focused on these short-term gains, but you could actually miss out on the bigger picture.
Yeah, it's true. It's all about perspective.
Right.
Imagine you're flying over a mountain range and you spot this beautiful, lush valley below.
Okay.
That's swing trading. You're capitalizing on those short-term price swings, the valleys and peaks in market sentiment.
Okay.
But by focusing solely on those short-term moves, you might miss the larger upward trajectory of the entire mountain range.
It's like getting off the train before it reaches its final destination.
Exactly. You think you've reached the end of the line, but the journey's not over yet.
So it's like checking your compass every now and then to make sure you're still heading in the right direction,
100%.
even while you're navigating those short-term twists and turns.
Exactly.
Now let's talk about those swing trading indicators.
Okay.
The article mentioned moving averages volume RSI.
Right.
What can you tell us about these trusty sidekicks?
Think of these indicators as your market compass and spyglass.
Okay.
They're going to help you navigate the market's language and hopefully anticipate its next move.
So they're like those tools that a detective uses to crack a case.
Precisely.
Let's start with moving averages. What clues do they reveal about the market's movements?
Moving averages, they essentially smooth out the wrinkles on a crumpled piece of paper.
Okay.
They help you to see that underlying trend more clearly.
So instead of getting lost in those daily ups and downs, you're looking for the overall trajectory.
Exactly. Are prices trending upwards, downwards moving averages give you that clarity.
So it's like plotting a course on a map and focusing on the destination rather than every single bend in the road.
Exactly.
Now, what about volume? How does that factor into all of this?
Volume is like measuring the market's heartbeat.
Okay, tell me more about this market heartbeat.
Just like a strong heartbeat often indicates good health, high trading volume often suggests a strong conviction behind a particular price move.
So it's not just about the price itself, it's about the energy and the momentum behind those price movements.
Exactly. High volume during a breakout, for example, that's a really strong confirmation signal.
Okay.
It suggests that this move has legs and it's more likely to continue.
What about low volume?
Low volume might make you want to think twice,
Yeah.
be a little more cautious.
Okay, so it's like a hesitant footstep versus a confident stride.
Exactly.
Okay, so we've got our trend indicator, our market heartbeat. What about RSI? How does this tool help swing traders make those more informed decisions?
Think of the RSI, the Relative Strength Index, as a market thermometer.
Okay.
It measures the magnitude of recent price changes to tell you if a stock is overheated or due for a little warm-up.
It's interesting.
A high RSI above 70 suggests that the stock might be overbought, potentially ready for a price correction.
Okay.
On the other hand, a low RSI, below 30, might indicate an oversold condition, like the stock has been beaten down and could be poised for a bounce.
So it's like gauging the market's mood, its temperature.
Exactly.
Too hot, you might want to proceed with caution. Too cold, and there might be an opportunity for things to heat up.
Right.
With these indicators and a well-defined strategy, it seems like swing trading could be a really rewarding approach.
It can be.
But I'm also hearing that it requires a certain mindset,
Yes, it does.
a willingness to embrace the unknown and adapt to the market's ever-changing rhythms.
Absolutely.
It's not just about mastering the technical side of things. It's really about mastering your own psychology, your reactions to those market swings, because those can be intense.
Yeah, it's like having the most finely tuned race car you can imagine.
Okay.
But if you don't have a skilled driver behind the wheel, it's just a hunk of metal, right?
Right.
You are the driver in swing trading.
I like that.
And your emotions, your fear and your greed, those can either lead you to success or send you careening off the track.
So how does a swing trader learn to become that skilled driver, to manage those emotions effectively? Because when real money is on the line, it's got to be tough.
Yeah, it's definitely something that every trader grapples with. I mean,
Right.
one of those crucial things is having a well-defined trading plan.
Okay.
It's like having a roadmap that you stick to no matter what the market throws at you,
So it's about taking the emotion out of the equation as much as possible.
as much as possible.
Yeah.
Yeah. Because emotions can be really dangerous in trading.
Right.
So you really need to rely on your plan.
Okay.
Your trading plan is like your anchor in the storm.
I like that.
It prevents you from making those rash decisions that can really eat into your profits.
Speaking of profits, it's important to remember that swing trading, like any form of trading, it's not about winning every single trade.
Of course not.
It's about consistency, right?
It's about consistency.
Yeah,
Exactly.
having a strategy that over the long haul delivers those wins.
More wins than losses. That's the key.
Exactly. So it's not about hitting a home run every single time you step up to the plate. It's about getting those base hits consistently.
Exactly. And managing your losses effectively.
Right.
You have to have realistic expectations going in.
Yeah.
Losses are part of the game, you know.
For sure.
Even the most successful swing traders in the world, they have losing trades. It's how they manage those losses that sets them apart.
It's about having that long-term vision, that discipline, and that belief in your strategy.
Absolutely. Swing trading requires patience, resilience, and a willingness to constantly be learning and adapting.
It's about riding those market waves, but also navigating the storms.
Exactly, because there will be storms,
Right.
but you have to weather the storm to come out ahead in the long run.
It's been awesome taking this deep dive into swing trading with you.
Yeah, this has been fun.
We've covered a lot of ground.
We have.
We talked about defining this unique trading style, explored specific strategies like the Fibonacci retracement and the breakout strategy.
Right.
We talked about the risks, the volatility, those technical signals.
You can't forget about those.
And of course, we talked about those key swing trading indicators, moving averages, volume, and RSI.
It's all connected.
It is all connected, and these things can help you make those more informed trading decisions.
Exactly. Being informed is key.
It is. And it seems like a big part of that is that emotional intelligence component.
Oh, absolutely.
Right, because you can have all of this knowledge, you can understand these indicators,
Right.
but if you don't have that control over your emotions, you could still make those rash decisions.
Exactly. It's not enough to just know the what.
Right.
You also have to understand the why behind your trades.
So how does a swing trader kind of develop that mental game? Because it can be so easy to get caught up in the moment, especially with real money on the line.
Yeah, for sure. One of the most powerful tools, I think, is having those very clear and well-defined goals. And even more importantly, writing them down.
Writing them down.
Because when you have that clarity, it's a lot easier to stick to your plan and not get sidetracked by those emotions.
So you're less likely to make those impulsive decisions.
Exactly. Because you've already done the work up front. You've thought about your risk tolerance, your profit targets.
Right.
And you've created a roadmap to help you stay on track even when the market gets crazy.
It's like that old saying, if you fail to plan, you plan to fail.
100%. That's so true in trading. You can't just wing it. You need a solid plan.
So for those who are just starting their swing trading journey, what advice would you give them when it comes to developing that emotional discipline?
You know, I would say start small. Don't try to go all in right away.
Okay.
Dip your toes into the market.
Yeah.
Gradually get a feel for the rhythms and how you react to different situations.
So you can kind of build up that confidence and that emotional resilience over time.
Exactly, because experience is the best teacher, especially when it comes to managing your emotions in trading.
Well said. Well, it's been fantastic taking this deep dive into the world of swing trading with you.
Yes, thank you for having me.
We've explored those high probability strategies, uncovered potential risks, and really emphasized the importance of that emotional intelligence component.
You can't forget about that part.
Absolutely not. And for those of you listening who are ready to ride those market waves, remember, knowledge is power, but emotional intelligence is your secret weapon.
I love that.
Arm yourself with both, and you'll be well on your way to success.
Absolutely couldn't have said it better myself.
Thanks for being here.
Thanks for having me.